morning, stacking up today. Trader Tom White of Red Option Advisors joins me now. Let's talk about some individual stock plays. What do you think about FedEx?
Yeah, so FedEx released earnings earlier this week, and what we saw out of them, one of the big conundrums for me with that stock is we had fuel prices last quarter at record low levels. We've got deliveries of online services like Amazon and whatnot growing exponentially, and what we're seeing from this company is modest growth based on stock buybacks and raising the dividend. So to me that says mismanagement of the company. Although the shares have been going higher, I think they're doing it synthetically through stock buybacks and through the dividend purchases. So my idea here is, as the stock fell after earnings, there was a lot of option premium in the name, expecting about a 4% move. And what we're seeing is the stock getting hit on that. They lowered some fiscal year 17 numbers, and my expectations are we see a low of about 152, 153 in there, and maybe a top ceiling of about 170. So it's going to probably stay range bound during this slow period through the summer. But you know, I'd be a buyer around 152 and probably a seller around 169, 170.
What do you think about Tesla? This news that Elon Musk wants to pick up Solar City and put Solar City under the Tesla umbrella of all things electric. What do you think about that?
Yeah, they had a discussion about it. He came out with the news that they were going to buy it for just under $3 billion. He kind of looked in the mirror, he said, should I buy it? And he's basically talking to himself. The company stock is down 63% just this year alone, Solar City. They've got a lot of debt due at the end of 2017, short-term debt that they're going to have to refinance. They're building a product that in 15, 20 years might be non-existent. Solar panels, the way that they're building them now, they're burning through a lot of cash. I think this is more of a bailout than a takeover, to be honest with you.
Interesting.
But at the same time, they talk about the synergies between Tesla, which is an electric car maker, and a solar company. Unless they can come up with some idea that they're going to actually merge those businesses into something that's going to, maybe sell something. Tesla's already got issues. They had to raise cash already once to expand their Model 3 that's supposed to come out next year, ramp up production. They're going to have to probably get more cash, take more debt on with this purchase of Solar City. I don't see it. I think it's a horrible timing, but you know what? He's that type of visionary, so maybe he can make it work.
Okay, let's move on to one other stock, and it's McDonald's. What do you think about McDonald's here?
It's been cratering over the last month alone. It's down over 11, 12%, I believe. It's getting near that $120 a share price level, which I think is pretty good support. But at the same time, the stock traded in a range between 80 and 100 for 5 years, and now it's trading from 120 to 130. So that's another one of those names that could stay range bound over the near term. I still don't like it on valuation, but as they continue to innovate and this new CEO is doing a really good job, we could see the shares pop back up.
Thank you so much. So much wisdom.
Good to be here.